Okay. Wait a minute, 1 second. I'm trying to do this out quickly. Dude, what a freaking day. Well, please, thank you to all. It's the best meal in Alaska right now. Today was the first day I had a full meal. I could not believe how everything has turned around. Oh, I eat it just like that. It's really where that in your shower. Yeah, that's ready. But as a new guy, I realized. Okay. I think it's light now, so let's do this. Okay. Oh, can you hear me okay?
Yes.
Okay, great. So, obviously last week, some of the stuff that we some of the pairs that we looked, they played out the way that we expected them to play out. So EOGBP, it played out exactly the way that we said it was going to play out. I did a video about it. I posted not maybe yesterday or so. The high was broke. It broke that high and then retested, and then went all the way to hit our take profit. If you go under 1 hour, so when I was in this trade, yeah, usually I say that when you're targeting for when you're targeting, you usually have to target like the body of the candle, right? So what I did is this particular trade is I targeted the wick, and obviously when I was in the trade and I checked it, it came to the body and it started going down. But obviously, the way that this strategy works is once you do it, if you follow all the steps and everything and all the confluences, you don't have to worry about it, because you know that it will definitely play out exactly the way that you know. So for example, yeah, this I'll show you. So imagine when I got into the trade, it almost hit my stop loss. It almost hit my stop loss. So that's why anytime you're trying to, do your stop loss, you're trying to put it in a place, you're trying to give it room, a little bit of room. Yeah, usually you target like the previous low, but what I wanted to do with this particular trade is I targeted this low because I know the liquidity lied here. So I targeted this low to be where my stop loss is. Unfortunately for us, it went the way that we wanted it to go, and it was really good. And I think we also spoke about I think we did gold as well, and I think gold played played out exactly the way we wanted it to play out. And I think we did the USD SDG as well. It played out exactly the way I wanted it to play out. Imagine this one. So I think I did like a 1 to 2, but sometimes when I'm trading these pairs, I don't put like no take profit. So it means that if it decides to run off the way that this run off, then it will just keep going, right? So I targeted this level to take the profit, but if I had left it, imagine I would have gone all the way to this point, right? Which is going to be like a 1 to 20 trade, meaning if you put £1,000 in there, you would have made £20,000. Obviously, that's not what I did. I only targeted like a 1 to 5. So yeah, that was from last week. I'm seeing some opportunities in this particular trade as well. But I'll wait for, because I'm seeing that it's giving us another indication to the downside. It's corrected now. So if you're marking up, right, you're drawing this was the break. That was a break that happened for the new lower low to be formed. And then obviously you have your high here, right? You have your high here. And then this is the level of support that has been created because you've got your new lower low now, right? Your new lower low has been formed here. So this new lower low has been formed here. So a lower low indicating to the downside. The correction is happening now. So what I'm expecting for this particular trade is for something like this to happen. And then once it gets here, the target will be there. I'll be able to short once it comes back to this level, and then my stop loss will be somewhere here. And then my first target will be this one, of course. And obviously I will check maybe the ultimate target will be this one for the whole trade. But yeah, this is what I'm looking for if obviously it continues in the direction that it's going right now. The markets are going to be open soon. Yeah, okay, actually open now, so we'll see what the Asians. To be fair, yeah, we'll see how that goes.
Absolutely. You see when you said first target,
Yeah.
how does that targets work?
Okay.
Do you choose one, and then if it hits, it stops, or does it continue to the second? How does that work?
Okay. So remember we deal with buyers and sellers, right? So
Yes.
buyers are at the top of this level, right? At this level, you know the buyers are here, right? They shoot the
Hmm.
market to the top. We know buyers are here. We also know that sellers are here. Everything below this, sellers are here because the sellers are pushing the market to the downside, right? But then we also know that buyers would also be here because remember what happened here. The the market was all the way down here, right? It sold to this level, and then it bought to this level. Buyers pushed the market to this level, and then the sellers brought it back to this level, and then the buyers pushed the market all the way to this level. When they got to this resistance level, they couldn't break this point, so they sold all the way to this level. So the reason why this is our first target is because we know that at this level, when the buyers got to this level, when the sellers sold the market all the way to this level, what happened? They are now trying to buy all the way back to this level, right? So if they get to this place and the sellers are strong, they will always try to sell all the way to that level that it came from. So if we are trading, this will be our first target. So we are saying that okay, the buyers are going to buy to this level, and if the sellers are stronger, they are going to sell. And we know that we are going to have a level of reaction, a reaction at this point. That's why we have the key levels. The key levels are levels where you have the reactions, right? So if you watch that video that I explained, this is our lower low, for example. This point is our lower low.
Yeah.
Actually, let me delete this one so I'll show you. Okay, let me delete all of these things. Yeah. So if we come today and then this is where the market is right now, currently, this is what the live market is. Yeah. This is what we are seeing right now, live market. If we come to this place, you want to mark up your chart on the 4-hour time frame because that's what we want to mark up our charts. You can do that on a 1-hour time frame as well. You take your path tool, right? This is your low, right? Where did this low come from? This low came from this high, right? Where did this high come from? This high came from this low. Okay, so because of that, we now know where our key levels are. What are key levels? Key levels are places where reactions do take place whenever the market gets there. So let's mark up our key levels. These are our key levels. These are our key levels. Right, and let's delete this. So in this area by itself, in this particular area, we know that when the market goes to this level, there is a reaction, right? And when it comes to this level, we know that there can be a reaction. How do we know that there can be a reaction? Because we know that from this level to this level, the buyers were strong. They pushed the market all the way to the upside, right? But then when they went to go gather more strength, the sellers here said, okay, now we have enough to push the market all the way to the downside. But then they broke that resistance level, right? And they came all the way to this level. But when they got all the way to this level, buyers were also waiting for them at this level, and they're now beginning to push the market up, which is the correction happening right now. So we know that the correction can either take place from here and then it can go down, or the correction can go all the way to this point. If the correction breaks this point, then we know that we need to look at a different direction now because the market wants to go up, right? If the correction doesn't break that point, and as we are looking at it right now, it will be something like this, right? But we know that it can also be that it will sell to this point and then this level will be strong and then push it back up. Do you understand? You can never
Yeah.
know. But then all you're looking for at this point is you're looking for that correction to be completed. How do you see that the correction is completed? You go to your lower time frame because it gives you more clarity, right? So remember that I said that. Okay, let's go back to the 4-hour time frame. So we have our indication on the 4-hour, right? This was the low that got broken. So this is our new indication to
Yeah.
the downside. So the new lower low being formed here. So let's make this quite clear here. There's a new lower low being formed here. But that was the let's take this one to the previous lower low that this was the lower low that got broken. So this new lower low has been formed. And then we now begin to see that the market is being corrected, right? On the downside, don't forget that the market is always going to move like this on the downside, right? So this part is what's has happened already, which is what we can see here for the indication. And this part is going to be the correction, which is what we are beginning to see here, right? So this is what the correction is looking like. But the correction, if you want to see it properly, what you want to do is that once you see some level of correction, you go to either the 15 minutes. 9 times out of 10, I check the 1 hour, right? And I'll see what's happening over there. Then I go to the 15 minutes because that's where we're going to enter our trades, right? So this whole move is that indication that we saw on the lower side, right? And now this is the correction. Remember, because it's going to the downside, the correction is always going to be bullish, right?
Yeah.
It's always going to be bullish because it's always going to be, it's a bullish correction. Why is it a bullish correction? Bearish correction. Where is it? It's bearish correction because it goes up to correct itself before it begins to go down. So when it's going up, you're looking for highs to be broken, right? You're looking for highs to be broken. You don't want the lows to be broken because the correction has to be completed. How do you know that the correction has been completed? When your lows begin to break. Do you understand? When your lows begin to break. So now this low, it looks like on the 15 minutes, let's see what's happening on the 5 minutes. On the 5 minutes, that low has not been broken. But if these lows begin to break, if the lows begin to break, then we know that the correction has been completed, and now the continuation would have to continue to the downside, right? So once this low breaks, we're looking for something like this. And then what I will do is that at this key level, that's where I will enter and put my sell. And I go to my 1 hour, and then I'll target the previous low. And then when I target the previous low, what I'll be looking for is to target. There's nothing for me to target at the moment, so I'll just do like a simple 2 to 1. Do you understand? I'll just do a simple 2 to 1, and then I'll see how it plays out. So the reason why we have first targets, second target, sometimes 3 targets is because you're trying to trade it from one point to another key, to the next key level. And then if there's another key level, you want to target that key level as well. That's why we have these different type of targets. So for USD, SGD, this is what I'm looking for. But guess what? It's patience that makes you win in this market, right? So the fact that this is looking like this doesn't mean I'm going to enter the trade. I'm just going to wait. If the correction doesn't conclude, I'm not taking the trade because I want to see the lows being broken in the 15 minutes, right? So I want to see this low getting broken. And then if this low gets broken, then I know that it has given me an indication as well. So if you go to the 1 hour, we know that this was the 4 hour indication to the downside, right? Indication. If you go to the 1 hour, you'll be able to see the same thing happening there. See, this was the low that was formed on the 1 hour, right? This was the low that was formed on the 1 hour, and that low got broken as well. So we have that indication as well. So that's the 1 hour indication. Let's make this one red. Yeah. So on the 15 minutes, what you're trying to do is you're trying to see the same thing as well. So you're waiting for this low to be broken as well. Do you understand? So it means that it is correlating. Now the 4 hour is pointing downwards. The 1 hour is pointing downwards. The 15 minutes, right, should also point downwards. Then it means that all the time frames are aligning. So now you'll be able to enter the trade. So you see this particular candle that is being formed right now. If it breaks this low, then we know that 4 hour is having an indication to the downside. 1 hour has got that indication to the downside. Now 15 minutes is also trying to form that indication to the downside. And then once that indication is formed, or you're gonna wait, you can enter the trade from there, or you can just wait for a correction on there, and then you take the trade at the key level. You can decide to take the trade once a correction is made from this level, but if you want to be safe, you want to take the trade below this key level because you know that sellers are going to be strong at that level. How do we know that? Because we know that buyers are always pushing the market to the top, right? But if they're able to break that support level, then obviously it's going to resist to the downside. So this is what we are looking at with USD SGD for this week. We'll see how that plays out. It's looking clean, to be fair, because see, that low is getting broken, but we cannot say that until that candle completely closes. So all these things happening, it doesn't mean anything. It's possible that it's gonna break that low, but it's still gonna end above that low. If it ends above that low, it means that that low has not been broken. So we don't have an indication to the downside, and we're gonna have to wait or it's gonna give us something else to work with. So that's what is really with this one. I saw an opportunity in gold as well. Let's go to the 4 and I'll show you what I'm seeing in gold. So on gold right now, this is what I'm seeing. Right. So on gold, this is where the high is right now. That high came from this low. That low came from this high. So our key levels are going to be here, right? Let's mark up our key level. So this is going to be our key level. The key level is not a line. That's why usually I don't usually do the line. I use the box to draw it because it's an area. That's an area of interest. It's not just a line that you want the market to go. Now it has to be an area where you know that in that area when the market gets there, there's supposed to be some sort of reaction because the market has already shown us that okay, I react at these levels, right? So these are going to be our key levels for these are going to be our key levels right now for this gold. So let me to be fair, before that, let me show you what played out last week. So last week, this was our high. So when we go into the market, it was over here, right? So this was our high. That high came from this low. That low came from this high. And then usually, obviously, because if you don't know it, then obviously this is how you're supposed to, find your key levels. You use this 4-point thing to find your key levels, right? So that was our high. And then obviously this was, oops, sorry guys. And this one as well. And then obviously that low from this level. So what you're waiting for is that you're waiting to see what happens when the market gets to these levels. Okay, so the market was there, we got our high. That high got broken. This high got broken, right? This high got broken. So our indication to the upside, our indication to the upside. Remember, the reason why I say the key levels are very important. Usually, if there are 3 touches on the key level, then you know that's a strong key level. So you're not just going to see just one key level and be like, okay, that's a strong key level. If you're seeing 3 touches on the key level, it means that it's very likely that the market is going to react when anything happening at that level. So if you're taking it from this level, you can tell that the market was at this point, it broke that high, created that indication over there. And then the market sold to this level, tried to break that resistance. It couldn't break it. And then it sold. And then when it's got to this level, buyers were strong. They pushed the market all the way to the upside. And then obviously sellers were strong. They brought it here. And the buyers were strong. So they were able to break that resistance level, creating a new indication that the market wants to go to the upside. So we had our indication on the 4 hour, right? Our indication on the 4 hour was already made here. And what I did was I go to the 1 hour to see that the same thing is happening. And I knew that, okay, on the 1 hour as well, this high was broken, right? So we have another indication on the 1 hour to also prove that, okay, 1 hour is giving us the same thing that the 4 hour is giving us right now. Sometimes it's not giving you, you're not going to force it. If it gives you, you mark it. And then I went to my 15 minutes. When I went to my 15 minutes, I realized that on the 15 minutes, I wasn't seeing the same thing that I was seeing because at the 15 minutes, I think at that time it was around this area, right? It was around this area on the 15 minutes. So I wasn't seeing the same thing. So if you go into the market and the 4 hour is giving you an upside, go into the upside, and then the 1 hour is giving you an indication to the upside, and the 15 minutes is giving you an indication to the downside, you're not going to enter that trade because it's not giving you any indication that it wants to go to the upside. So what I did was I was waiting for either this high to be broken, this high to be broken on the 15 minutes. I wanted this high to be broken, and then I also wanted to see what was going to happen. Obviously, I marked my key levels, and then you also remember that in between the highs and the low is a no trade zone, so we don't trade in these zones, right? So what happened is that there was an indication to the downside, but then I wasn't bothered because I knew that it was the correction that was happening because of what's happened on the 4 hour time frame with an indication to the upside. So the minute this high got broken, right? The minute this high got broken, this was the high. The minute that high got broken, now we have an indication on the 15 minutes, right? So now the 4 hour has got an indication to the upside. The 1 hour has got an indication to the upside. 15 minutes now has got an indication to the upside. So all I had to do was to put I waited for the correction, and above this level, I just put I just entered the market from there. I went to the 1 hour and I targeted like a 1 to 2. My stop loss was down there. And then it played out very beautifully, right? So this week we're looking at a similar thing as well. I can see right now that these levels are being formed. We've got a level of support here and resistance here. We've got these lows here as well. And obviously that's an indication, right? So on the 4 hour, we have an indication to the upside. We got our 4 hour indication. On the 1 hour, let's see what's happening on the 1 hour. On the 1 hour as well. On the 1 hour, we have on the 1 hour, you come here, that high came from this low, that low came from this high, right? And you draw your key levels on the 1 hour, right? So on the 1 hour, we're having the same thing happening on the 1 hour. On the 1 hour, we're having the same thing happening on the 1 hour. Let's make this one green. Yeah. Make this one green. On the 1 hour, we're having the same thing happening on the 1 hour. And then that's going to be our high. Right? So on the 1 hour, we're having the same thing. How are we having the same thing? Because of this high on the 1 hour has been broken as well. So we have an indication on the 1 hour as well. So now all we're going to wait is for us to have the same thing happening on the 15 minutes. On the 15 minutes right now, the market is moving down, so we don't have an indication to the upside. So we're going to wait for that correction to be completed. If that correction gets completed, then we'll be able to enter the trade. But for now, we just have to observe it. So what we are waiting for right now, we're just gonna wait on the 15 minutes time frame for this correction that's happening to finish. So once the correction finishes, I know that anytime corrections are finishing on the market that is bullish, lows are going to be broken, right? So this low got broken. This low got broken. You can make this one a low as well. That low has been broken. So I'm just waiting for that to be completed, and then what I'm waiting for is that it can go all the way to this level. I don't really mind. Once it comes to this level, and then a high is broken, and I can begin to look at my trade. Or it's possible that I can just begin to, do whatever it wants to do from here. And then once it breaks a high, I know that the lows are not going to be broken now. Highs are now being broken. I'm going to have my higher highs and higher lows being formed. And then once I begin to see the higher highs and higher lows being formed on the 15 minutes, I know that it's now aligning. It's already aligned because on the 15 minutes, we have our indication as well. We don't have an indication at the moment on the 15 minutes. We have the 1 hour, we have the 4 hour. We don't have an indication to the upside on the 15 minutes. So once we have an indication on the upside on the 15 minutes, I'm good to take the trade. So this week, I'm only looking at SUSD. I'm looking at this one, USD, SGD, and obviously I'm looking at gold as well. We'll see how that plays out. If it plays out the way that we want it to play out, I'll do another breakdown video to explain it. But yeah, that's what we're looking at this week. Let me know if you have any questions at all.
Okay. As you were doing it, I was practicing on like a silver. So can I share my screen?
Yeah, hold on.
Because instead of doing gold, it's already showing it.
Okay. So what I'm gonna do is I'm gonna end the stream now. I'm gonna end the stream and then I'll jump on this. I will switch to Discord and then we can go through what you've done. So I'm gonna end the stream right now and then we'll see you guys. Don't end the call though. So stay on the call.
Yeah.
But I'm just ending the stream. So I'll see you guys on